So what we have in this case is, again, this wick starts forming, and this is, again, ideally where we want to see our trade happen. If we have clear dealing ranges, strong dealing ranges forming inside of this area, and this is when we want to be inside of the trade right away. So traders very often ask me, what's my favorite type of daily time frame candle delivery? What's the ideal formation regarding the daily candle? So without going into too many details, I can say right away that I split my trading into day trading and scalp trading. Day trading is when I look for bigger moves, when I have bigger targets on my scope, and then I have daily time frame backing my vision when I want to see full top down alignment from the higher time frames to lower time frames to execution time frames to time of the day to my entry pattern and everything else. And regarding scalp trading is when we don't have daily time frame on our side, when we are simply left with the lower time frames and execution time frames and lower time frame liquidity pools and target. This is where I focus on quick in or out scalp positions. This is where I'm aggressive with my management. This is where I take my profits fast and so on. But now again, in this one, we are talking about the first portion, and here let's dive right away into the ideal daily candle formation, the so-called protractive movement that I like the most. So now let's imagine that these lines right here are our bearish candles. What we have is a bearish trend here on the daily time frame. Price is trading to the downside. What we saw right here is price retracing into the bearish fair value gap. It rejects it, drops to the downside, leaves another bearish fair value gap. So for clarity reasons, let's mark everything right here. This is a normal and clear bearish delivery on the daily time frame. We have on our high right here, then we have another bearish fair value gap right here. So in this type of a case, obviously we would expect ideally for price, if focusing on just this piece right here, nothing else, just this specific movement for here, price moving to the downside. Again, let's highlight this arrow right here. We are focusing on bearish delivery. So in this case, what we would focus on is this high right here and this low, identifying the short-term dealing range. Now, what we have aligning in the premium area is bearish fair value gap right here. And let's say what we also have right here is a bearish order block. So we can draw that as well. So let's do it. So let's say this is our area of interest. So whenever we have formations like that, whenever we get a clean dealing range, whenever we get clear bid raised, what we tend to focus on with our crew first is identifying the dealing range, identifying the area that price, in order to continue pushing with the main direction, must reach first, again, in order to continue dropping with the main direction towards the main draw on liquidity. So this is here in the pullback stage, because again, if this is the time frame, we are in the pullback stage. They identify a clear area, a clear short-term draw on liquidity right here that price must reach in order to continue dropping to the downside. Again, important to mention that we never know if price, let's say, is going to just give something like this, leave SMT between the structures and continue dropping. Sometimes it just even keeps on climbing to the upside without even respecting this whole area right here. So that part we don't know. What we do know, however, is when we get these types of formations and lower time frames, or here if this is daily and we switch to lower time frames like 1 hour, when they start creating bear traps and very sharp lows and structures to the downside, this is when we don't want to trade towards these strong lows right here. What we want to do is trade away from them. And all these structures in the middle simply become liquidity pools. And what I'm talking about is often price drops, but doesn't give a shift in delivery. What it does, it runs this sell side liquidity reaches into bullish P race around this area and around the strong low and continues pushing until it reaches into daily feeder race. So again, if this is daily time frame and this is 1 hour time frame right here, when we have this type of option, this is when we start focusing on quick in and out long positions to the upside right here until it reaches into our point of interest area on the daily time frame. That's when we move to the signed lines, and this is when we start focusing and waiting to see if price is about to actually switch from that area and start delivering the downside, from where we start looking for bigger day trades, for bigger moves. But now, strictly talking about the daily candles, the ones that I like the most is when daily time frame is in this type of state and it's about to pull back. What I like the most in when in these type of cases, price on the daily time frame leaves a sharp wick like that, where we can see that if it ran some daily candles before, it leaves a wick like this. And from that point, what we ideally want to see for our trades to take place, no matter if we are trading on the scalp side or day trading side, if we are trading with the main wind or against the main wind, this is when ideally what you want to see is protractive candles. So let's say if this is a bullish candle right here, price dipped lower around some daily candles on the left side. They have our magnet area right here on the upside, which again, I must say that this is a short-term magnet area. This is when they simply lift to the left side. We identify all the other smaller liquidity pools. So these are these structures right here, these structures right here, and then the first PD array that we have around the premium area of the daily dealing range. So now from this factor, when we get something like this, what we start looking for ideally is price not taking out this structure right here. So what we want to see is price actually gravitating to the upside away from these candles. And now they do formation, what we started this video with is price on the open on the next day right here. When it opens the next day, what we ideally want to see is price not pushing to the upside right away. It can happen, it often does happen after these types of candles. Then we obviously look for what we are talking about in the next day. That again, let's say we get a trade right away on this day, on the second day after this candle forms. What we ideally want to see is price pushing to the downside, so obviously forming a bearish candle right here. To remember that this price is the close and the open of this new candle. It starts pushing to the downside, and what it does after on the lower time frames, it trades into the bullish P raise of this candle right here. It trades into the bullish P raise that would be visible on 15-minute, 1 hour, 4 hour, and what it does, it starts pushing to the upside, in this case leading a bullish wick. So imagine that it traded to this level, reached into some bullish P raise of this day right here, and starts pushing to the upside, leaving a wick behind it right here. This is where the most ideal trades are born in these types of situations, when price starts pushing to the upside, when you already have a long position running inside of this wick, and it keeps on pushing, in this case turning now into a bullish candle, and just continues going higher. So now from this case, let's see if we didn't get a trade on this day right here. What we would open expecting next day to form is a similar formation. So if we have this line, for it to be a healthy candle, let's say that it ran about this side right here and then closed right here. Let's do that with this one as well. So let's say that this daily candle ran to this high right here and retraced, leading a tiny V and closes like that. So now opening on the next day, again, what we would expect ideally to see is first of all this day right here from the lower time frames point of view, leaving bullish PD raise, leading sharp bullish structures and some low resistance structures in the middle of this candle right here that we ideally would want to see on the lower time frames to run. So what I'm talking about, let's say that this small drawing right here is low resistance liquidity from the lower time frame perspective, and this is a strong bullish PD ray that he would look for price to reach from the 1 hour, 4 hour, or 15-minute point of view. So opening on the next day right here, focusing strictly on longs from this side, after price opens and starts protracting, this is what ideally we want to see. Not price shooting to the upside like that, and then starting to drop lower, leaving a wick to the upside. This is not what we want to see at all. If price starts forming something like that, dropping to the downside now, forming a bearish candle, and dropping towards this bullish P ray, this is not what we want to see. Sometimes it takes place. Again, we sometimes even take the risk trading against this type of formation, but ideally what we want to see after price opens is not blasting to the upside and then pulling back. What we want to see is after it opens right here, it either leaving a tiny wick but ideally not taking out the previous day's high and starting to retrace right away. This is the ideal formation, and price is retracing right after the open. So it forms this bearish candle right here. It runs all of this sell side liquidity around the middle of this daily candle that happened the day prior. It reaches into bullish P raise from the last day right here, and then it starts pushing back to the upside. So what we have in this case is, again, this wick starts forming, and this is again ideally where we want to see our trade happen, inside of this area right here. So price keeps on pushing to the upside, it keeps going, leaving this wick right here, and eventually it blasts higher, forming another bullish candle in a row right here, pushing towards the premium short-term magnet area, bearish P raise, and all of that. And your position, your trade ideally would be placed around this area right here, below the midnight open, aiming for this entire run right here, placing your trade in the wick of this daily candle. From that point, what we would start looking for, then price reaches, let's say, into all of our P raise. So we have this candle, let's say we have this candle right here, and what we start seeing is price actually starting to leave wicks on the upside now, not the downside, but the upside. This is again what we ideally want to see. That shows pressure, and what we want to see is pressure from the price action. So now in such situation, what we would start looking for, in most cases it doesn't drop right away. Another candle very often happens to be another wick, something like this right here. That also continues pushing higher, takes out this buy side liquidity of the previous day's high, and usually after that only then it starts dropping properly. So now let's imagine that what we saw from that point actually starts taking place. Price gives a sharp drop to the downside right here, pleading a few wicks. So obviously you can't start positioning yourself into early shorts. That's obviously, as always, a bit risky, but you can start doing that. And let's say after we have all of these reactions, this bearish candle close, this bearish candle close, and then eventually a full-on reaction. In this case, I think you guys can see that what we would have is a BPR bullish imbalance right here, filled with bearish imbalance right here. But this is a very good confirmation factor. It's not always needed, but again, that's perfect type of confirmation. And from this case, if we have clear dealing ranges, strong dealing ranges forming inside of this area, again, opening on this day, what we are looking for is not quick in and out scalp positions from that point. What we are looking for is a full-on day trade classic sell day. We are looking for bigger, sharper, quicker moves, aiming for this main original low right here, which from the lower time frame perspective often happens to be a market maker model, this being the original consolidation. Price keeps on building the buy side of the curve and then starts building sell side of the curve. When that is taking place, often price on the upside gives a lot more formation, and then on the downside it literally melts in a few days, sometimes 2 or 3. So this is something to keep in mind as well. So on this day opening right here, what you would again expect is after this candle closes, this price not sharply taking out previous day's lows right away and then starting to pull back. Ideally, what we want to see after this candle opens is price protracting to the upside, running some buy side liquidity inside of this area right here, and of course from this point reaching into clear bearish beat race, lower time frame dealing ranges premium. So price keeps on pushing higher right here. Obviously it would be a bullish candle, pulling back, and after that starts dropping. So this is where we would see this bearish wick starting to form, and this is obviously where you ideally would want to see your trades happen inside of this area right here. So it starts melting. Ideally, again, your position is already in play right here. Price ran some buy side liquidity from around the middle of this expansion right here. It reached into high probability bearish P race, starts reacting, starts rejecting. From the 15-minute point of view, we start seeing first signs of order flow, execution timeframes align, and this is when we want to be inside of the trade right away. Ideally, again, previous day's lows not being tagged, not being taken yet, which becomes our first magnet area, first drawn liquidity right here. And this candle keeps on dropping until it turns and switches into a bearish candle right here, leaving this wick. And what often happens with these type of formations is that price just starts melting really, really fast. And what you did right here is you position yourself in the best possible area. You position yourself in the wick of the protracted movement of the daily candle. So that's all I wanted to cover in this video. I hope you will find this useful and helpful. I wish you a great day, and we will talk very soon. Take care.